Alright guys, before we start today's video, I just want to say since we hit 1,000 subscribers, I promised I would open the Discord to you guys, and here it is. I'm putting the link in the description. I repeat, it's going to be in the description, the link to join. If you're looking for a community to join with like-minded people, share your thoughts, share your trades, have any questions, and especially if you want to talk to me and have any specific questions or simply need any help with anything, join my free community. There's a lot of great people in there, and I'll definitely be there to help you guys out. And let's grow this thing and let's make it a great community for everyone to grow and become the best, not just traders, but the best people they can. So, like I said, the link will be in the description. And yeah, thank you guys for the 1,000 subscribers, and let's get right to the video. All right, everyone. I am Evan Trades. Welcome back to another video. Thank you guys for joining. In today's video, I'm going to be going over how this, well, in this case it's two because this is an example, but how one candlestick basically can change your trading after understanding it for the rest of your life. And that's not dramatic at all. This is something I currently use a lot more often in my trading. I have used it in the past, but now I have used it recently a lot, and I thought I would explain it to you guys how precise it is, how amazing it is to understand it. And when you understand this simple concept and how to apply it to your trading on why it's so important, then it will increase your trading performance by a mile. And it will clear up any troubles that you'll have. If you are struggling with entries, risk, or finding where to spot the best trades. So let's get right into it. All right, so you can see on the screen here, we have two candles. We have what appears to be a bullish candle, and then we have what appears to be a bearish candle. So the reason I'm showing you guys this is because this is all that it is right here. So what I'm going to be going over you guys is called open high low close, OHLC, and then open low high close, OLHC. And understanding the power of three and basically AMD. So basically we have to understand what are the basic fundamentals of a candlestick. What does a candlestick do? Well, for this example, we'll use the bullish candle, right? For a bullish candle, the open will be below here. This will be the open. The bottom right here will always be the close. I meant the low, I apologize. Above we have the high. And then right here always is where the candle close will be. So it's very crucial to understand everything about a candlestick because it makes everything easier when you're going in a trade, and I'll explain that later. So basically what this candlestick is telling us, right, that in this candle, whatever time frame, this could be a 4-hour candle, 1 hour, 15-minute, daily, weekly, whatever candle, whatever time frame this candle represents, price within this time frame opened right here, price opened right here, the lowest point we reached was right here. We then retraced higher, expanded up, we went to this high, and then we closed in price right here. That's basically what this candle is telling us. So now let me show you guys an example of the bearish candle. It's basically the same thing, just vice versa. All right, so now you can see, here is our bearish candle example. And as you can see, it's literally the same, but it's just the opposite. We open in price right here. Price within the candle, within the time frame this is representing. In that time span, we went to this high at most. opened here, went to this high at most, and then had an expansion down all the way to this low, and then we closed here. So that's pretty easy to understand. Now once you understand that, now we can use that to trade on the lower time frames. So in this example, we're going to be using the 4-hour and the daily, but mostly the 4-hour for examples. So let me explain to you guys why it's important to use this for trades. So our goal as traders are to come into the market, and the very first thing we are taught to do is find a bias. That should be the first thing on our mind. Finding a bias where we think the market is drawing towards, where do we expect a move to within the trading day. So that should be the very first thing, and that's the foundation of your trading. That's what should be the foundation of your trading, is where do you think the market's drawing towards. Alright guys, so here's an example of what this candlestick represents on the time frame. So right here, like I said, for a bullish candle, we have the open. Price opens right here, and then we retrace lower, create the low, which creates the wick, the bottom wick, and then we somehow form a setup, and then we create that expansion move higher, create the high, and then we close right here. So that's initially what's happening in price. This expansion move, it can look like whatever, but it's going to be an expansion move no matter what. I mean, it can be choppy all the way up and still have a close. It could still look like this, but be choppy, or it could be a straight up move. But at the end of the day, it doesn't matter what price looks like. I mean, if you're expecting an expansion move and the candle to close like this, then you should be okay. You just need to be patient. But this is just an idea of what price action would show in a scenario like this. The open, we create the low, we expand higher, create the high, and then we close right here in price and open the new candle. So why is it so important? Well, we have to understand why these candles are so important, because our goal, if we want to catch expansion moves, if we want to catch the best entries, right? If we're bullish, let's say on the daily, if we're bullish on the daily, or if we're bullish going into the trading day, and we want to see the daily candle expand to a certain level, higher, for example, our goal is to find a trade below the candle open, or just around the open, right? Our goal is to find a trade around or below the open and catch the expansion move higher. You don't have to catch the whole trade, but at least catch a move higher towards the direction where you think the candle might expand to. So this is why I drew this out for you guys. So every time we have a candle open and you're bullish and your bias is correct, the manipulation is always going to go lower. So if you're bullish, the manipulation will always happen below the open. That's where the manipulation is happening place. We want to catch trades right here. This is where we expect manipulation to happen, to then, off that manipulation, catch the expansion move. Because I don't know if you guys have noticed or paid attention to it, but after SMTs, especially after SMTs, we will have expansion moves. So aligning your model with catching trades below or above opens, spotting SMTs, is a great sign. So this is a setup right here. We open, price consolidates a little bit, we go down, create the low, come back above open, candle open, we come down, create the SMT, run through our inverse for value gap, create a change in the state, come tap it, tap the inverse, and then we take off, right? Blah, blah, blah. And then we close up over here. So that's our main goal, right? First, I want you guys to understand this, what it looks like, and why we want to trade to catch a trade below the open. But now I'm going to show you guys some examples on the charts and show you guys how precise this really is. But first, let me show you guys a bearish example before I do that. I apologize. Alright guys, so this is a bearish example. of a setup using the open, high, low, close. So price opens right here, as you can see. We have that manipulation move higher. Maybe we get a higher time frame SMT that we put right here, or it could be an internal SMT as well. And then we have some form of manipulation up here, like I said. And then this is where our setup will occur. Manipulation at the highs, and then we get displacement, back into the fair value gap, and then we have that expansion move even further, right? But whatever your model is, whatever entry model it is, doesn't matter as long as you're seeing a clear setup within the area where we expect manipulation, which would be above the candle open, to then have a more precise entry to catch that expansion move. And so now, since you guys know, I'm going to give you guys some on-chart examples, show you guys the precision, and I'm going to show you guys about time and price, and also how that aligns with this and makes it even more powerful than how it is right now. Alright guys, so this is going to be a trade example from earlier today, this morning, as of April 17th, 2025. So I usually don't trade around this time, but this could have been impossible. I'm just going to show you guys how precise, where the manipulation happens and why it's important. So going into the morning, if you trade pre-market, as you can see, I mean, lately we've been bearish, right? We have this 4-hour respecting, couldn't get to these highs, tap back into it. We created an SMT with YM at these highs. I believe it was this high, I'm not sure. So we had manipulation at the highs. If we continue lower, price respecting a new day opening gap right here. And it looks like we're just continuing bearish order flow all around, maybe targeting these this internal low and this low. So and then obviously price in the overnight session respecting this inverse fair value gap. So as you can see, this candle represents the 4-hour candle. This is the one I personally use because it just works the best for me and I love it. And I'm not trying to catch the whole daily range expansion move. I'm just trying to find quick, confident moves. So as you can see right here, this is where price opened, right? So if we're bearish, right? I am bearish in this scenario. If I am bearish, I want to see a move above the candle open to then see an expansion lower, because that's what we just learned, right? We want to find manipulation above the open to then catch the manipulation. Because if the candle's already expanded all the way, then you have a less probability of catching a bigger move, or not a bigger move, but just a good trade in general. So this is where patience comes in. So our goal is to find a trade that comes above open. So if we wait, okay, now look at this right here. Price comes up above the open. You can check your guys' charts. We create a SMT at the highs above the candle open in an area where we expect to reject. Tapping this changes the state. SMT at the highs, area where we expect to reject. Also respecting this 15-minute. Right? So zooming in, it's up to you. If you like to take, while it's wicking, if you'd like to take shorts, but me personally, after seeing that, I would most likely like to take a trade after this fair value gap gets ran through, because that wick is telling me that we basically just want to go lower, essentially. So you could take a trade after that, and then it would go lower. But that's just, I wanted to show you guys the manipulation and what it looks like. But now I'm going to show you guys an example of an actual trade setup and the precision of it aligned with time and price. All right, so this is later in the day. This is towards 10 a.m. As you can see, we're still very bearish in order flow. This market maker sell model is playing out, and our targets are still the same. We created relative equal lows with this low and still targeting this low as well as confident targets going into the day. So now we have this huge 5-minute that's still being respected, and then zooming into the 1 minute, we also have this 1 minute that got tapped back into, wick down, and then we also created an SMT at these highs as well, which is very nice. So we created manipulation in an area where we expect to reject. We got rejection down. Zooming in, we have IFVG right here, and then we also have a change in the state. So this is the perfect entry model, at least for me. Be a perfect forever model. Price comes down, run through the fair value gap, the IFVG, become retrace up. Notice where the 4-hour candle opens, the 10 a.m. candle. This is the very crucial one. Opens right here, dips down, come backs up above open, then taps back to the change in the state and this IFVG. We start to get a retracement lower, and you could target these relative equal lows down here. Stop above the high, the protected high, an SMT, where manipulation occurred. And just like that, you'd catch yourself a nice trade. Maybe not as clean, but look how the candle opened up. Remember what I said? It doesn't matter how choppy price action might be if you still expect the candle to end up like this, an expansion move lower. Manipulation above the high, tapped into an area we expect to reject with our model, and then we see the expansion move lower, which is aligned with our higher time frame model. So those who are catching my drift understand this can be very powerful, because some people, without using the 10 a.m. candle and the manipulation, they could have easily maybe entered off this inverse fair value gap right here. They could have saw this fair value gap get ran through. You know, we have the change in the state. We're respecting it. They expect us to dump. But look what happens. Enter off the inverse, stop above the high, because you're not going to put your stop all the way above here. No, you want good risk. And then you put it right here, and then you get absolutely ran through. So no. You wait for the 10 a.m. candle open. This is what I do. Wait for the manipulation or price action to line with my model. You have good risk, and you know that's it. You sit back and you sit there patiently, like a trader should do, not worrying about your trade. But if all is well, then you should expect this, an expansion move higher or lower towards your drawn liquidity. So now I'm going to be going over a bullish example for you guys. All right, so going back to last week, April 10th, we displaced up, we created this huge order block right here, and this 4-hour breaker block as well that we were tapping into. And I'm gonna mark it out for you guys actually. It's 4-hour breaker block, which held my attention. We continued to respect it. So what I wanted to see was, you know, us dig deep into this 4-hour huge imbalance, maybe this breaker, and then possibly see a retracement back higher towards this internal high and this external high within the coming next week or a couple weeks. So going into the morning session right here on April 10th, we had very, very bearish order flow, but we are in an area where I expected to reject off of. So I let internal price action validate that. So I wanted to see a bullish setup within this fair value gap and this breaker block. So in this scenario, we're going to be using not the 10 a.m. candle, but the 2 a.m. candle. So now we see price, we're in this huge fair value gap, we dig lower, we dig deep to this, the breaker block. And now we're gonna wait for the 2 a.m. candle. All right, so here is the 2 a.m. The 2 a.m. candle, 10 a.m. to 2 p.m. So right here, we've dug deep into this 4-hour. We have a retracement into this fair value gap, this breaker block. We're starting to see a little bit of retracement. 2 a.m. candle opens up. Look where the open is at. Right here. We're bullish, right? We want to be bullish. We're expecting higher price. Where do we want to see? We want to see an manipulation below the open, because if we're bullish, we're expecting an expansion move higher off this 4-hour candle. So we're trying to see an expansion move higher. So we want to see manipulation below the open. So right here we have this 15-minute fair value gap, which should be below the open. And then you possibly see a setup right here. And then you have all these highs as targets as well. You have this one as well, this one as well, this one as well. It's all up to you. But as long as it aligns with your higher time frame bias, as long as you're aligning the biases and aligning the candle opens with your bias. This is why it's so important, folks. This is why it's so important for having daily bias as your main foundation in your focus. Because if you simply get it wrong, you can mess up everything. So that's why finding daily bias is like 70, 80% of trading performance. So right here, we would trace back to the 15-minute. We sweep this low right here. Take out this internal high, consolidate a little bit. Manipulate lower one more time, taking out this low. Oops, put the wrong thing. Putting that low, manipulating higher, tapping this for value gap. And then eventually that was market close. So yes, this wouldn't have touched that, but there was an expansion move higher. I remember I caught this trade, I believe, as well. We swept these lows right here. We created this change in the state. And I believe I entered on the like 15 or 30-second chart. And then I caught the expansion move higher to this level because I was confident in this trade right here. Those who are in my community, know about this trade. I just recently took it last week, but I did enter right here around the change in the state because we were below the open. We manipulated lower, take out this low, stop below the low, have a 2-to-1 risk reward, and then got the expansion move because I wasn't looking for higher price because that's greed, and this was already a lot of points because due to volatility. So this is exactly what you should be looking for right here. A setup below the low, right? You have your inverse, change in the state, the forever model, close above, enter, stop below the low, it's below the open, and then you catch the expansion move. Alright guys, so this is the final thing I'm going to show you guys. This would be an example of AMD. AMD, I mean accumulation, manipulation, distribution. This would be a bullish example with our wick, right? We have our open right here. Price opens. We consolidate. We then manipulate lower. That's what we talked about. We look for manipulation lower, taking a higher time frame sell side to create SMT. This is where our wick creates. Then we find our setup. We catch the expansion move, and then we have the distribution. So accumulation, manipulation, distribution. So again, the candle opens right here. We consolidate. We manipulate lower, which creates the wick with an SMT or higher time frame key level. And then we have our distribution, which would be our reversal slash the distribution slash the expansion move of the power of 3 candle. So this would be the power of 3. This is why ICT taught us, because this is what happens a lot of the time. Accumulation phase, manipulation, and then the distribution phase. It happens on every time frame. It can happen on the 4-hour, 1 hour, 15-minute, 5-minute. So if you're a huge trader and you like huge expansion moves, huge profits, then looking for this on the daily with the daily candle would be perfect for you. But if you trade intraday and you're wanting to find intraday moves but still trades like this, you can use the full power of 3-4 hour candle. I guarantee you'll still find trades like this. And then you would find your basic setup, IFVG, and then you have a huge change in the state right here. But wherever you want to take your entry does not matter at all. So that's basically all that I have for you guys. Thank you guys for hanging around for this long video. I wanted to really share this with you guys because it's been helping me a lot with my trading. Be more precise, I'd say, than before. It's really changed it and it's really helped it a lot. And I just want to bless you guys with that. And hopefully it helps you guys. Hopefully, I'm praying it does. If you guys have any questions, let me know. Drop a sub, drop a like. And if you guys have any video ideas, let me know in the Discord community in our channel. And yeah, and we'll talk more about this later on in our Discord calls. But thank you guys again for the 1,000 subscribers. This is my first video after that. I just want to thank you guys for that. That was awesome. And to many more to come. 10K, 100K, many more goals to come. So thank you guys for being there and supporting me. But without being said, I will see you guys in the next one. Peace out.